He is the chairman and managing director of Vibha Seed Group. He is the shining example of an entrepreneur in seed and aligned industries who has demonstrated that how dedication, attention to details and sheer hard work can transform many lives. So let's welcome Mr. Vidyasagar Paruchi, please. Now may I invite Mr. G.V. Bhaskar Rao, Kaveri Seeds Company Private Limited. Mr. Bhaskar Rao is the chairperson and the managing director of Kaveri Seeds Company Limited. Andhra Pradesh is a technotrack with business acumen. A seed entrepreneur, Sri Rao was instrumental to sharp up the seed production program of public bred hybrids and varieties of corn, bajra, sunflower, and paddy in the family. May I also call upon Mr. P.S. Dravid, Krishidharan Seeds Limited. Mr. Dravid, as President, Business Planning and Corporate Affairs, his main responsibilities are advising the co-coordinating KGOC on various matters relating to profitability, sales and marketing, R&D production, HR management and administration. It gives me immense pleasure to have all you guys here. Thank you so much, sir. It's your pleasure to please address the crowds. Now may I please begin with the session. The topic of discussion of the panel 4 discussion will be future of the seeds, and I please call upon Mr. Vidyasagar Paruchi to begin the presentation, please.
First, let me thank Mrs. Gubba Seed, Gubba Cold Storage, Kiran, for giving me this opportunity. My colleagues on the dais and my colleagues in the industry. I was talking to Kiran yesterday. What is this topic? Is the topic of future of seeds or future seed industry, or future of seed stores stored in the Gubba cold storage? He said I should talk about future of seed industry. I'm going to share my experiences. I have established this company with 2 employees. I have employed 2,000 people and we are paying salaries, and we have seen the growth of the company. And I fully understood, I being the researcher, and what can happen and how this industry looks in future. It's a kind of a thesis work of my experience of 18 years in the seed industry. You may agree, you may disagree, but the facts are there. I'm going to present some of the facts. I hope some of those things will be helpful to you. Yeah, next slide. Now you must be seeing it on the screen. 2012, 21st 12, 2012, it's going to be world's doomsday. That's a prediction. The next slide. Now you can see the global seed war. Expecting such kind of disasters. Go back to that. The global seed world was created in Norway, which is one of the most modern. If something happens on 21st 12, if someone survives, you can still go back to this and get some germplasm and start our business. I think we should see today we are here to see that this is one of the best, world's best global seed world available. Next. Looking at the population, by 2050 we are expecting 9 billion, and mostly concentrated in Asian countries. Next. And I'm going to present some statistics. What is going to be the global agriculture? What should be our strategy? And as in India, where we are standing. If you look at the crops, cotton is the scenario for the past 60 years. Data shows we are going to be the leader in cotton, and we stay with cotton as the #1 crop. So as a seed industry, we have to be there in cotton if we want it to be big. Next one. The next crop is rice. Again, you are the number one in the world. So the number two is China. So we have to be in rice or not is a question mark. But I can't suggest that we should be in the rice, so it's a debatable point. The next one. Wheat, although we are increasing it, we are trying to grow, but there are a number of competing countries in Europe and USA. They can be our competitors. It's a debatable point. It's a bit risky. Next. World corn acreage. That China and US or the Brazil are the leaders. India stands for. And corn is polarized around Americas because they are the meat-eating countries, India being the vegetarian country. I don't see much prospects for corn going beyond 8.5 million to max maybe 10 million hectares. So where do we stand in corn? Already it's a saturated market. Next one. Then soybean. Soybean is again polarized into Americas because of the meat production. You need corn and soybean for feed. So again that is polarized around Americas and Latin Americas. I don't think we should be getting into soybean. Next one. Now you can see this is sunflower, which was the crop for us a few years ago, but the whole sunflower crop has taken place in Eastern Europe, Russia, Ukraine. So 18 million hectares is there. India, we have seen significant drop for the past 5-10 years. I don't think this is the future crop. We are importing oil with zero duty. So anybody putting money in future research in sunflower is going to be in deep, deep trouble. Next one. Now you can see the millets and sorghum. Now that is declining, and I don't think I will put my money in any of the declining crop. So I will stay away from millet, and it's a dicey crop. Every 3 years there is an issue of a powdery mildew. Unless you have strong research, it's going to be, well, it's up to the decision of the companies. Next. Now looking at this data, a summarization of the data, the rice, we are going to be the number one. Number two is cotton and millets and all, and the corn. I think these are the three crops we will zero down for any of the future business, any long-term investments have to go into this one. Next one. Now, is it Indian seed industry is growing or is going to be sucked in? I feel if you are not alert, if you don't look into the reality, you will be sucked in. Next one. You can see the market. The hybrid cotton is 3,700 crores. We are into 11 to 12 million hectares. Corn 850 crores. We are into 8.5 million hectares. Again, we have 50-50 between open pollinated and hybrids. And vegetables again, we have 2,500. This is a segment which was growing, probably considering the retail. I think this is the area we should see. And this again, 6.5 million is shared between 50-50 is your OPs and hybrids. And there is scope for conversion considering the FDI in retail. The next comes a 1,500 crores business of open pollinated, which is into 100 million hectares, which is untapped. So if you want to tap this, so what's the mechanism? It's a low value. You have already 13, 14 state seed corporations are there. There is all several regional companies are there. There are product shifts. So any growth has to come from this segment. Cotton is fully saturated, maize is fully saturated, and vegetables there is scope, but it is retail and kirana in nature. So beyond these three segments, I wouldn't be looking at any other small segments, millets and all, 10 crores, 15 crores. It's a bit nasty. Next. Next one. Now, how the industry can grow? Now we need to create downstream businesses or downstream demand. Now if you see that, I don't know, I'm not able to see this slide. US is the exporter, Europe is the exporter, and Russia and Latin America are the commodity exporters. But don't see any exports from China, India, because we have the population we are consuming. Unfortunately or fortunately, Food Corporation of India is maintaining a 7 years buffer, so which is enough. But this year we have seen 103 million tons of rice being produced at a record crop of wheat 93 million tons, but we have a storage space of only 65 million tons. under cover, 45 million, rest is under open environment. So that's the situation. Unless India becomes commodity exporter, there is no scope that we will get into open pollinated varieties and we can export grains. The next one. You can see the hangama. Hangama is what's happening with Food Corporation of India. About 50,000 crores of stocks or grains are rotten, and Supreme Court had given a directive to central government to distribute the seeds, the grains into the public system. The next. Now what is required? This is the situation of the farmers. We go for overproducing, overselling. Now farmers are not getting remunerative prices. This year cotton is the same situation. Wheat, we have got some kind of export so that wheat prices are better, so wheat crop is approved. So it's the end user, the end product demand which determines the seed industry. I think we are stuck. We are stuck in the oscillations. Next. What we need is a change in the storage infrastructure. Today I'm happy that we have created a storage infrastructure here storing seeds, but what we need is a right kind of storage infrastructure all across the country, near the ports, near the airports, grain elevator systems or silo systems like United States, or so that we can preserve our grain, we can tap export markets. Next one. I think that's what government should. Next is the silo bag system. In Argentina and all, storing the seeds in silo bags with carbon dioxide. And whenever there is a demand, this can be pumped up. I feel unless we create the storage infrastructure, create a section of exports outside, your business is not going to. Already we are at plateau. Next. Then maize. To increase maize, being a vegetarian country, 50% is going into the poultry. Unless we encourage swine or beef cattle production, encourage meat exports or downstream businesses like corn oil or corn flakes or corn powder and corn sugar, the area is not going to increase. So it will be, since US there is a drought and there is a drought for soybean, the soybean and corn prices are high, these are speculative. So next year there could be a doomsday for us. So it's a bit risky. Next. So, the seed industry, imagination of the seed industry, integrated seed industry. Yes, this is what I have visualized. We have set up a big research, the big infrastructure. We have one of the largest marketing network and the largest everywhere. But the kind of human capital you need is missing. The capital investment is very expensive with the current interest rates of 15%, 16%. Is sucking out, whereas the multinationals are getting at 3% plus liver, maybe 6%, you are at a disadvantage. And also the kind of collateral securitization required for the is also not available. Many of the companies, most of the companies' nature is a kind of a family business kind of a structure. Again, there is a limitation on the securities and limitation for raising the capital. Unless, next one. And also regulatory regime. Now these are the major challenges for the seed industry. Weather and commodity prices. We have seen this year how we have suffered because of the drought in the initial years and how we have suffered with the cyclones in the and for the seed production. Now government policies, we have price intervention, there are price caps and subsidies and regulatory changes, all these are maneuvered. Then forecasting is 50%, you don't know, there is a product shift is so fast, the farmers wants every 2 years a new product. It's not that easy to produce a new product every 2 years, so you need to carry with inventories, you have to carry with obsolete stocks. The production and supply challenges, there is a boom and boost, suddenly your production goes up, the next year your production is down. So it's also difficult to manage and maintain the turnovers, and stiff and unhealthy competition and stagnant growth. Many companies are having carryover side. Don't think anybody has liquidated to the 5% level or 10%. The 15 to 30% is a normal norm in the industry. The huge carryover and huge capital cost, that is sucking out many of the companies. The fund management is very critical for the industry. When you are into a multi-season company, multi-crop company, you need huge working capital to manage inventories for 3 seasons. Then you have to have a stock returns. Then you have to have the Rabi sales and your receivables will be there, then you have to 20, 30 next year's crop you have to pay, and by January onwards you have to pay 20, 14 advances, about 4 buckets of money required. 3 to 4 years of working capital is required for a seed industry to blossom, and if you have a full-fledged industry. Then research. No company, nobody is going to fund your research. If you are spending more and more, it is written off as a capital expenditure. Nothing is coming on the balance sheet as an asset. That's another issue. So longer working capitals and lack of RBI guidelines. In June, RBI has removed seed industry from the priority sector. They have taken seed processing. Seed processing is one small facet of the seed industry. The seed industry, full integrated seed industry is research to production to supply chain to sale. Probably as an industry we should work and ask RBI to formulate seed industry guidelines. The next one, please go back to the last slide. Now you're going forward. Please go back. Yeah. Now you're going forward. First slide. And one more. Okay. The complexity. When we are having 20-25 crops handling about 250 products between Kharif and Rabi season, different pack sizes, the matrix of handling is very, very complex. I'm happy that Gubba here is having a software. Probably one has to invest very heavily into the software capturing information from the distribution, the channel, and also production area, and from several places. So heavy investments are required. Then expensive talent. There's very less available. Very few breeders are coming out of the institutes, and everyone wants to be an entrepreneur. So retaining and talent is very, very difficult. It's the most expensive. Next one. Next slide. There's a stiff competition. There's a bullfight in the market. Somebody bleeds and somebody enjoys. And once a company attains a size, it's very difficult than an elephant to cross it. So there is a limitation on the size a company can attain. Otherwise, it is too cumbersome. And outside India, there was a consolidation, big fish eating small fish. But in India, it is all the smaller companies which are trying to eat the big fish. Now we see more than 1,000 companies. Right now, 750 companies in vegetables are registered. Now they're all after the big companies cutting the share. I'm telling 120 lakhs, 1 crore 20 lakhs was sold by a competitors invisibly in cotton. And that's where the problem lies. So without your knowledge, your share is cut. At regional players, several are district players, several are this, and that is the most dangerous thing we are seeing. So there is a limitation. Next, a competition, changed production scenario. There's a competition from commercial crops. Maize is giving 50,000-60,000 rupees. Unless we compensate the commercial price, no farmer is coming forward. The cotton is fetching better price. Unless you compensate the commercial price, better than that, nobody is coming forward. And there's doubling and tripling of the cost. Same working capital, same volume, you need 200%, 300% of the working capital at higher cost. Then increased competition from major players. Major players have swelled, they have become big, they're investing in resources, as they're investing in branding, research, and we should respect the competition. That competition is coming with several new research products. So I do not know after 3 years who will be the number one. I do not know after 4 years who will be number one. So everybody is becoming competitive. So pressure on major players to supply more and more brands. It's again the polarization of the branding, the brands, and people want those brands. Although the things are easily available, the better products are available, unless there is a branding or brand polarization, the companies are not going to survive. And also reduced production area, and we are facing serious irrigation problems, power problems, and less manpower available, less labor availability is getting into this, and the business has turned into a cash and carry. It's like a commodity you have to pay. You have to take the risk for the failed lots, you have to take the risk for GOTs, and a cotton which we used to pay in May, June has moved to February, January. Now people are asking money in October and November. That you look at that. We are going to sell in June, but the money has to be paid for the same stock in the month of October, November. So there is a changed dynamics in production. One has to understand. Then increased cost of capital expenditure, seed drying facilities. Now you can see for the past 10 years how much the companies have invested in the capital expenditure. Storage is a good thing that Gubba has relieved some people of the capital expenditure of that money. I think more and more people should come out with more services. Then you have processing and packing. I think this is the dynamics of the production. Next one. The working capital models. You need to run the company, you need to have working capital which is an oxygen, which varies from company to company, differs from a single crop company to multi-crop company, differs from companies operating in single season to multi-seasons, differs from geographical presence. If somebody is marketing southern hemisphere, the sowings are in October, November, you need to maintain inventories and there is a cost. Then differs for matured companies who cannot get advances, but a company is growing may not command those. Again, there is a pressure on the working capital. Differs from intensive research where people spend money, multi-product companies to non-research few product companies. So there is no benchmarking. What model you choose, what is comfortable to you is what you have to see that, rather than saying somebody has done it, I'll copy. So it is you have to design your own mechanism for your own company. Next. Now, there's a formal funding and informal funding. Seed industry is basically funded through informal sources. We go to the dealers, distributors, we float advance booking money. Probably 70% of the business is being done for advances. And also there is a pressure on the companies to pay informal funding to the organizers. Whereas the formal funding is